Here we have the week 5 profitable member trading strategies update. The stock that we will be looking at today is Archer Aviation. Stock ticker is ACHR. For this stock, my upside price target here is $12. Relative to current market prices, this would equate to total profit gains of more than 214%. I will be covering the chart analysis in a more in-depth way in the technical analysis portion of this video. But as we can see here, the share price itself has sort of fallen a bit recently, and we're sort of trading right around an important $3 support zone. And given the company's recent developments, some of the contracts that have been signed recently, I do think that we're in store here for a turning point, and that downside from here, further downside, should be relatively limited. For a little bit of background, Archer Aviation engages in the development of electrical vertical takeoff and landing aircraft, eVTOLs. The company was founded by Brett Adcock and Adam Goldstein in 2018. The headquarters is in San Jose, California. Just to get a sense of what we're talking about here, this is the type of vehicle that we're talking about. Essentially, these are aircraft that take off vertically rather than a traditional kind of forward runway type of event. This is almost more like a helicopter type of aircraft. And what we're really going to be looking at here is the possible implementation for this type of vehicle to be used within urban mobility type of infrastructure, and we're even talking about flying taxi type of processes. Overall, the global reach here is not, extends far beyond the United States itself, and we're really looking at sort of mobile, urban takeoff and landing devices. And I do think that this company has a tremendous potential for growth here in the quarters and years ahead. Just a few more pictures of the processes and the different types of aircraft that they create. Okay, so now we'll look at some of the recent developments and milestones that have been achieved by the company, because a lot of this is the reasoning to explain why I think that near-term price lows for the stock are likely in, and we should start to see a more broad trend movement in the upward direction. Recent developments at Archer Aviation include Archer's Midnight eVTOL aircraft. This was shown in the prior picture. I'll just go back and show this quickly here. This is the Midnight aircraft. This is essentially their flagship product, and this is really what most of the company is going to be focusing on near term and in the quarters going forward. So Archer's Midnight eVTOL reached flight speeds of over 100 miles per hour and successfully transitioned from hover to wing-borne flight. Automaker Stellantis strengthened strategic partnerships with Archer Aviation recently, and they recently invested an additional $50 million in the company. This is building off of a previous investment. Stellantis is essentially the major shareholder at the moment. Future Flight Global is another partnership here. Future Flight Global agreed to purchase 116 of Archer's Midnight aircraft in a deal worth $580 million, with plans to launch air taxi services across the globe in regions like Asia, Europe, and the Middle East. So this is not going to be a company that's simply centered in the United States. There is a lot of development here in the United States as well, and particularly with the U.S. military. But there are going to be commercial applications here as well that extend far outside of the United States. Future Flight Global's agreement has nearly $5 million in pre-delivery payments, which has brought Archer's indicated book value to around $6 billion. Archer Aviation recently delivered its first Midnight aircraft to the U.S. Air Force. The U.S. Department of Defense accepted Midnight's military airworthiness assessment, and the aircraft is ready for flight testing as part of the Air Force Works Agility Prime contract, which could be worth as much as $142 million. So this is a military contract with the potential for expansion here in the quarters and years ahead. As I explained previously, the stock is trading at a bit of a discount here. We are seeing some downward trend movement here, but we are trading relatively close to this $3 mark, which has worked as support previously, and we will be looking to scale into this position. This will not be a one-time trade. This is going to be a little bit of a longer-term trade, maybe relative to some of the prior trades that were suggested for this portion of the channel. What we will be doing here is kind of scaling it at current levels, and we will be building on this position if we did continue to see share prices move downward from here. Here we can take a look at the price target projections here. Looking at a 12-month forecast, if we do see share prices move into the $12 range, this would indicate potential gains of more than 214% for this position. Looking at the valuation metrics, what we're going to be doing here, this is a small cap stock with a large amount of investment capital that's required for these types of aircraft. So with limited revenue, we're going to be looking at the price to book ratio for a relative valuation analysis. Currently, Archer Aircraft is trading at a 4.1 price to book value. And as we'll see here, this is a favorable book value relative to other competitors in this space. A quick look at the Q2 earnings performance. This release was made public on August 8th, so this is in the rearview mirror at this point. We don't have to worry about this as an upcoming event risk. The company posted a 32-cent loss versus expectations calling for a 36-cent loss. So the company's not currently profitable, but we have to keep in mind this is a smaller cap stock, and that's par for the course when you're dealing with these types of stocks. For the most part, some of the stocks that we have been trading in the members section have been profitable, but we can't expect that to be true for most of these trades. I mean, for the most part, small cap stocks are not profitable companies just yet. However, even with this performance, we did see improvements based on expectations. And if we're looking at the annualized change in growth for earnings per share, these current figures indicate gains of 42.86% on an EPS basis. I do have this is Pubmatic. This was the prior week. I forgot to delete this part from the slide. This third bullet point is not relevant here, but this fourth bullet point is relevant here. I meant to copy and paste that. What was released in this most recent earnings report for Archer Aviation was an additional $232 million in additional equity capital since the end of Q2. So we are seeing continued gains in this area. There's a lot of interest in this company at the moment, and this is being seen from both the commercial perspective and the military perspective. Here we can look at the valuation history for this stock. If we're looking at the price to book ratio, which is going to be our main metric here, what we can see is that the share price itself is trading at somewhat low levels historically. And then in addition to that, we're starting to see a rising trend here that does support the outlook for this stock going forward. So not only are we getting the stock at a bit of a discount, we're also starting to see a bit of an uptrend here that's currently starting to develop. As I explained before, one of the key metrics that we're going to be looking at here is the price to book ratio versus the industry peer group. So as we can see here, the peer group average comes in with a 4.8 times price to book ratio, and with Archer's current 4.1 valuation, this is below the average for its peer group. In addition to that, we can see other examples of companies that are trading far above this level. So on a comparative valuation perspective basis, the company is in a very strong footing here, given the fact that Archer Aviation has secured more recent large scale contracts when compared to these other two companies that are trading at lower price to book ratios. Additionally, the annual growth outlook, the revenue growth for this company is expected to come in at 67.5%, which is monstrously above not only the industry group, which is somewhat low. The industry group itself is a bit of a difficult industry, but this is clearly a standout within that group because not only are we beating the industry group as far as potential revenue growth here, the broader market is expected to show gains of 8.8% over this period. of time as well. So, the overall revenue growth rate here far exceeds what's expected, not only within the industry, but in the broader market as well. So if we're starting to look at the balance sheet here, the liabilities versus the company's assets, here we can see that even from a short-term basis, the short-term liabilities far exceed what's seen in terms of the short-term assets far exceed what's seen on the liability end of the ledger. Currently, the short-term liabilities come in at 83.6 million, and then the longer-term liabilities are coming in at 66.4 billion. But even the short-term assets alone are able to cover those expenses by a wide margin. If we look at the debt to equity history analysis here, we can see that overall the equity level that's shown in the company far exceeds its debt. So this is a very strong balance sheet that we're looking at, and this is not something that would typically expected for this type of product. So essentially, what we're seeing here is the potential for exposure to a capital intensive product, but the company itself has very little debt. Relative to its overall equity performances, we have seen some recent moves lower in the equity portion of this figure, but a lot of this is due to the internal investment that's going on within the company to sort of meet these new contract goals that are being requested both from the military and from the commercial side of the equation. Here we've got a balance sheet visualization rather than showing the boring balance sheet itself. We have a visualization of how small the debt level is in comparison to the overall equity level, the overall cash investment level, long-term investments, and physical assets. So here we can see that the company is in a very strong position on its balance sheet. And as I said, this is a bit unheard of for a company that's dealing with products that are this capital intensive. There's a huge amount of investment that goes into these products. So to see a balance sheet that's this strong is a strong positive for this stock. Looking at the cash runway analysis for the company, we can see that the company has a very stable cash runway. Archer Aviation currently has a sufficient cash runway for the next 11 months, which is the typical metric that is used for these types of situations. For the next 11 months, based on the last reported free cash flow figures. Uh, but in addition to that, we do have to keep in mind that these recent government contracts have raised additional capital for the company. So the prospects here are growing rather than declining. The forecasted cash runway for Archer Aviation shows that the company has sufficient cash runway for the next 1.1 years if free cash flow continues to reduce at historical rates of 53.1% on an annualized basis. So far, this has been the cash flow rate that has been seen historically for the company. And if this continues, the company is in a firm position here going forward, well over 1 year, which is the standard metric that's used for the longer term metric. In addition to all of this, we can see that the company itself is showing a lot of insider transaction activity that is posting in the positive direction. Overall, the amount of money that's flowing into this company far exceeds the more minor movements that are seen flowing out of the company. And even when we have seen insider transactions that are bearish, these haven't really been recent. The last examples of this that we see came in November of 2023, and then early this year, January of 2024. So for the most part, the company itself, this does show a strong level of confidence within the company because there's continued investment, and we can see that money is flowing into the company rather than out of the company. Here we can see some analysis of the insider trading volume. So as I said, these somewhat recent trading volumes that have been bearish in nature have been farther out. We haven't seen these being occurring so recently. More recently, we have seen a large amount of money flowing in, and as I said, this is from both the commercial side of the equation and the military side of the equation. Overall, the ownership breakdown does show that this stock is somewhat known to the general public, but for the most part, institutional buying activity has represented the majority of the purchases so far. So, as we can see here, currently institutions own more than a third of the company, which is a favorable ownership breakdown, and this does provide some longer term security for a stock that is still considered to be small cap. So, in conclusion, Archer Aviation is one of the leading companies that is currently developing electric vertical and takeoff landing aircraft (eVTOLs). These vehicles, also known as flying taxis in some situations, for the commercial side of things, have the potential to change urban transportation as we currently know it. Current figures from Morgan Stanley project that urban air mobility markets could reach $1 trillion by the year 2040. So while near-term growth might be tempered by slower adoption rates, I mean, we are talking about flying taxis in some senses here. There is a bit of a slow adoption expectation here. But even with this, the eVTOL market is expected to rise at an annual compound annual growth rate of 15.3% if we extend these figures all the way out to 2030. So that's a long-term horizon here, and this does show that there is very consistent growth expectation here for the foreseeable future. Overall, Archer's aviation strategic partnerships and capital efficient approach, along with its innovative aircraft design, position the company as a top contender in this very high growth rate industry. So, overall, if we combine this with the fact that the share price itself is trading at somewhat low levels, I do think that the downside from here is limited, and that the $12 upside price target is completely achievable for this stock.